Hey everybody, Chuck Barone. It is Wednesday, May the 3rd, 2023. Federal Reserve, St. Jerome, out today. We knew this was coming, not a big surprise. The day played out kind of weird though, we'll go over it all. But before we do, just want to welcome everybody to the show. Thank you guys for your support, watching these videos, doing everything you do, your likes, your comments, your questions. We appreciate you guys, man. You rule. Markets today, well, just as expected, we've been, this has been telegraphed for quite a while now. The Federal Reserve coming out, raising interest rates again by 1/4 point, bringing the Fed funds rate up to, they call it a range between 5 and 5 1/4. I tell you it's 5.10. Nothing unexpected here. The Fed's been telegraphing this. The Fed yo-yos out there and their things have been talking about getting the Fed funds rate above 5%. They finally did it. They finally got the Fed funds rate higher than the rate of inflation, at least the reported rate of inflation. Was this going to be enough? We'll see. We'll go into Powell's remarks and all the rest of it in a little bit. But first, let's go through this market today. Stock market down, not a happy day for the market. More concerns about banks, of course. And now, there's a little more uncertainty about the Federal Reserve. They've telegraphed everything they've done up until now pretty clearly. And they've stuck to their guns. There hasn't been any head fakes or anything like that. We've known these rate increases are coming. They followed through exactly as they said they would. Well, now with the pause here, or maybe a pause, or could be a pause, or hopefully a pause, now we create some uncertainty. Market's not like an uncertainty. The Dow Jones down 270 points, 33,414. S&P down 28 points, 4,090. NASDAQ down 55 points, 12,025. Not a great day. Amazingly, I guess some of that money must have ran over into the bond market because bond yields falling today, prices rising. 10-year down 4 basis points, 3.40%. The 2-year dropping like a stone, 12 basis points, 3.86%. These numbers, don't you find it kind of crazy? I guess now they're pricing in this pause and rate cuts. We'll see if they happen or not. But this bond market completely all over the place, guys. It just is. There's no rhyme or reason to it. When you got rates gyrating 15 basis points up and down every single day, that's just not typically the way the bond market works. The dollar today down about 1/2 point. Not a great day for the dollar either. I guess factoring in pause, stopping these rate increases, which strengthen the dollar. Maybe cutting rates weakens the dollar. The dollar down 101.40 on the index. Still holding okay, but the dollar losing a little of its luster. Let's just say that. Metals today. Great day for metals. Another rally in gold and silver. Gold advancing $17.80, $2,034.40. A nice number for gold. Silver up 11 cents, $25.47. Great numbers here, guys. Happy day for gold and silver. As they move further away from those resistance numbers, it's going to be awesome. I think that, as I've been saying, gold and silver have a way to go to the upside. We'll see where it goes. I think that they want to rock. If there's room and there's money on the sidelines waiting, as the dollar continues to fall, gold and silver should rally nicely. Oil today, another bad day for the oil market. Down $3.47 per barrel, $68.19 for a barrel of West Texas Intermediate. It's kind of like, I got to say, not to blow my own trumpet too loud here, but I've been saying that the trends in oil are down. I'm really surprised it's come down this fast. It broke through 70 like it was non-existent. We'll see now if it stays in this 65 to 70 trough. Kind of like oil, the way it's been trading, it seemed like it was most comfortable between 70 and 75. It seemed like the prices were comfortable there. There was some stability in that range. But now it's broken through to the downside. Support at 70 gone. I have to look at charts to see where the next support line is, other than the natural round number supports. But oil, still, I believe the trend down. Summer driving season coming, though, could change all of that. We'll see how Americans are feeling about taking road trips this year, about vacations, because I've seen mixed attitudes about that. Some people saying they're going to put off traveling this year. Other people trying to take advantage of a strong dollar and get some travel in while they can. We'll see where oil goes, but I think overall the trend's still down. Bitcoin today down small, $380, 28,331 in Bitcoin. Still looks strong to me, guys. Bitcoin hanging in there, having some difficulty breaking through resistance at 30,000, but nonetheless, still holding a pretty strong number there at 28,000, well off its lows of 16,000 and change. So Bitcoin hanging on. News you guys need, well, as we've, like I said in the beginning, and we've been knowing this was coming for quite a while. The Federal Reserve concluding their meeting today, the Federal Open Market Committee meeting, raising rates by 0.25%, raising a quarter point, 5.10 on the Fed funds rate. This has been telegraphed, not a surprise. Interesting, though, some changes in their language for their forward guidance. They had said that they had already changed it once, saying rates would rise as the data indicated. Now they've taken out all the rate rise language. Powell, nonetheless, so this would indicate a pause in rate hikes. Powell, though, at the presser, said that no decision has been made on a pause, said that the Fed will lift rates higher if they have to, and that rate cuts were highly unlikely this year. I think that kind of moved the market a little bit too with some of Powell's language. I personally thought he would be a lot stronger because the bond markets still, factoring rate cuts in. But Powell went on blah, blah, blahing about incoming data, blah, 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 a bunch of mumbo jumbo that really didn't mean much, at least the few little bits of it that I've seen. We'll get into some depth on that tomorrow. So here we have a market that is expecting rates to pause and then to go down. Inflation, which is still sticky high, and I think that getting it from 9 down to 5 was an easier task than getting it from 5 back down to 2 will be, right? So we'll see. Something's got to give here, something's got to give here, guys. The market pricing in these cuts likely will react pretty negatively when the reality that these rate cuts are not going to come sets in. It's been my opinion that the Fed will not cut rates this year. I think that the economy has shown some resilience, even though it looks like it's weakening, which has been the Fed's plan. I think that, factoring in, they're pricing in a 0.75 of a point. They're expecting the Fed funds rate to be 4.33 by the end of the year. So they're figuring 0.75 of a point in cuts. I just don't see that coming, guys. I don't think we're going to get this inflation numbers we want between now and the end of the year. I think that inflation has stayed now pretty sticky high for the past couple of months. It was coming down nicely from the loftier numbers, but a little harder now. We still have the factor of greedflation playing into this. Corporations taking advantage of the times and raising prices with significantly more than their costs are rising. You have the employee rampage of higher wages. It's not quite a wage price spiral, but a demonstration of what one would look like. It's really going to be something. Now, Powell did make mention also that the Fed would not be able to help the government on a debt default. They would not be able to protect the economy or other consumers from the effects of that default. It would be a catastrophic thing for this country if they let that happen. And I'm willing to bet that even the craziest of crazy on Capitol Hill, which is what we're looking at as far as our Congress, even the executive branch, the courts, everybody in that friggin' town, man, there must be something in the air there. But even the craziest of the crazy, are not going to let the United States default on its debt. We'll see. This brinksmanship, though, makes the markets nervous. Sure as hell makes me nervous. We'll see where that goes. It's going to be an interesting month, this month of May. Investors looking now for the next regional bank that's going to fall. We know that there's a couple of banks that they've been looking at. They actually had to stop trading in some regional stocks yesterday. JP Morgan comes in, scoops up Republic, and makes out like a bandit on this, despite Republic's collapse. Listen to this. JP Morgan will assume $173 billion in assets, $30 billion in securities, and all $92 billion in deposits. Okay? They're going to have more exposure to high net income people, because that's who banked there at Republic Bank and Silicon Valley Bank. They said that this deal will increase net income at JP Morgan by $500 million annually. So JP Morgan scores. I still haven't seen anything about what JP Morgan is paying for all of this. And you know how these deals go. They're going to pay pennies for these assets. The government and the taxpayers, us, the schmuckatellis, we're going to assume all the crap and all the liability and all the deadwood in this deal. This kind of tells me that the bigs all were probably going to want to get on in this action, because JP Morgan, man, making out like this, you can't make out much better as a bank than they did on this deal, right? Tells me that it probably won't be the last regional to fall. This is all part of the ongoing thing where the big swallow the little. The idea of these monopolies, kind of monopolies, it's not one company, it's just a cobble of a small group in media, in banking, and investing, and in all this stuff, right? Is it a coincidence that the Fed, last time the Fed raised rates was immediately following the collapse of Silicon Valley Bank, raising rates anyway. And they know these banks are suffering with these higher rates, right? So now we got the collapse at Republic Bank, and here we are 2 days later raising rates again. This tells me that either the Fed just doesn't give a crap about regional banks, which I believe they do, or this is okay with the Fed, these regionals having this kind of pressure, because the bigs are going to come in and take a slack on all of this stuff anyway. Does it mean Powell's serious about fighting inflation? I gotta say, man, his job's got to be the worst one in the world, because the day is coming. It's already pretty much here. Today you're deciding, do you want to protect the banks, or do you want to protect, fight inflation? They chose inflation over the banks. Well, the next decision they're going to have is, do you want to fight inflation, or do you want to protect the economy, which is ripping into a recession? It's going to be a totally different decision to make. It's going to be fascinating to watch. Anyway, guys, I'm going to be digging through all Powell's remarks for you guys for tomorrow. We're going to get unemployment numbers tomorrow. We're going to get a lot of important stuff. It's going to be a big day tomorrow. Plus, the market will fully digest everything that happened today, so it'll be really interesting to see how the market's looking at the opening. We'll get unemployment numbers before the open, though, so that could skew things a little bit. It's just going to be an awesome day tomorrow. We're going to be here to bring you guys all the details you need. As always, thank you sincerely for your support. If you like what you hear, hit the like button. Those likes change those algorithms. Give me your comments and questions in the comments section. I'll be on today. I've just been super busy, guys, but I'll be on today answering all your questions and commenting with you guys. So get on and say hello, and we'll be back tomorrow to bring you guys the news you need. Until then, my friends, take care. Thanks.